following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Beatrice Potter. Believe there is something great. Believe there's a great power silently working all things for good. Behave yourself and never mind the rest. We need that right now, too, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 28. NASDAQ is off 12. S&Ps are down 4. Gold contract up $5.50, traded $1,202 an ounce. Silver up 4 cents at $17.04. Platinum up $8 at $1,153 an ounce. Copper up a penny and a half at $2.82 a pound. Light sweet crude up $2.09 at $51.30 a barrel. Bonds, you have the 10-year down 19 ticks, 128.07. 30-year down 2 full points and 7 ticks at 162.10. We'll go over those. That's a big movement in bonds, folks. King dollar. King dollar up 444 ticks, trading at 97.64. The euro down 95 at 108. And the yen trading down 22 at 119.27. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? Let's go to the world of the S&Ps first. What do you have? Okay, so we're going to put up the SPY. Take a look at the SPY out here. This is what we have happening in the SPY. We'll put this on a daily. And what you're going to see how this little baby is lining up right now. So the SPY right now, folks, is trading out at 205.52. We've done thus far 112 million shares. That's going to basically lay it up for about probably 120, 130 million shares. And where are we? Well, guess what? We are right at the swing point from the 11th of March. That swing point is 204.40. We're at 205.50. We've hit 204.12. And guess what? Bottom line, you're hitting it with volume. We're going lower. This high looks like no way it's going to get tested. Why? You came down off that high. You came down off the high with juice. It missed it by 4 points on the cash S&P. Now, what gets really intriguing here is this. Let me put this up for a second, okay? So last night, as the Saudis start bombing Yemen, I happen to be behind a screen, and I'm watching this, right? And this is important to just to understand, folks, in general, kind of how markets move. And I'm watching the E-minis, right? And coming across the screen simultaneously, the first blurb comes across that they start bombing them, right? And the E-minis aren't moving. I'm saying to myself, this is crazy, man. Okay? So I turned around, and the main reason it was this. Not that if I know there's a huge amount of trouble over there, but the bottom line is that most of the time we're involved in all the trouble. And the first blurb coming across was the Saudis were bombing them. So I'm watching the E-minis, and they're not moving at all. I'm watching. So then I bring up a map, and I look at the map. I said, oh, man, Yemen's right next to there. I said, that's it. Man, this thing's going south, right? Bottom line, we know what happened. You know, it goes south, but it doesn't go south that far. That aspect, folks, as I'm going through the market today, I want to show you something. Because I've seen this aspect before. That aspect in itself is always one of the most deviant deals in the world. And what I mean specifically is this, is that I suspect that not right at that second, but overnight, you had, whether it's our Fed, other Fed, they're moving into these markets right now, okay? They're particularly moving in, whether it's the dollar they're moving into, whether they were pushing gold lower, because gold spiked in a big way. But this all has to do with how the E-mini didn't move at first, because it was just crazy, okay? Bottom line, let's go through them, and I'll show you what we're talking about here. So, the SPY in particular. So we have what the SPY is this. And the deviance out here is really cool, meaning the deviance in the marketplace today. Why? Because you're coming into a swing point. It looks like it looked earlier that it was going to reject the swing point, meaning that you get out of here of the 204.40. At this particular point, I don't think we're going to. I think this doji's going to lay out here, and that doji's going to bring it down into this 198 area. That's how it seems to be set up right now. If we go to the 3 Qs, the NDX 100, what you have with the NDX 100 is this. The NDX 100 is trading at 105.20. Thus far, we've done 39 million shares. Your swing point down there had 42 million shares. And bottom line, we're hitting that swing with higher volume. That's saying that we're going lower. We're going down to this 99 area. The IWM, we take a look at the IWM. Now, the IWM, what the IWM had done is come off that high with monster volume yesterday. The IWM is not at its swing point yet, so I suspect it's going to crawl down there. We're at 122.15 right now. That lowest swing is at the 120.70. Now, let's go over to the gold contract. Gold contract out here today, this is what we did. The contract itself, huge volume. Jeez. We got price going. We got up to 1219. We're at 1202. That's a joke. What I mean by a joke is this. It couldn't hold price. But guess what we have, folks? We have 225,000 contracts traded. When you go to a higher high, you have big volume, you get right back up there. And I mean right back up there. We could be back up there tomorrow. If it's not tomorrow, it's going to be Monday. This is a push into all those swing points with dynamite volume. If we go look at the GLD and you want to see the correlation inside the GLD for the substitution, what you have is this. You've done 4.8 million shares today. That 4.8 million is going into 5.8 million. Bottom line, you're at 115.46. The 115.46 gets right above the gap. This thing is building cause to get up to this 117 area. Now, let's do oil first. Oil, CL. Oil market out here. What do we have with the oil market? So oil has 221 today. Wide price spread, accelerated volume. Next stop on oil is up to $56. That's the swing point. Oil has it here. Yeah, that's the bottom line. We've done 480,000 contracts today. So oil's going to make this run for the top of that run, which is 56. We're going to take a look at the bonds. Now, this is where this is going to get really intriguing again. So let me see what we have happening here. Because what we have had in the bond market is this. You had one expansion down. That expansion down, when it took out the B point of an ABC structure on the way down, was on March 6th. Yeah, but no, guess what? You're getting price, but you're not getting volume. We've done 1.2 million contracts today. The 1.2 million contracts is coming into 1.4. So bottom line, this is just building cause for higher price. That's pretty amazing too, because the 30-year has really got taken down in the aspect of point-wise. 2 full points. Yes. The 30-year has done 248,000 contracts, and that's also light too. So bonds, bottom line, are building cause for higher price. Pretty amazing, but that's exactly the way that these babies are shaking out. Okay, now King Dollar. Let's go over to King Dollar. What do we have with King Dollar? King Dollar was down 300 or 400 ticks this morning. Right now, we're up 440 ticks. And what you have with King Dollar is this. King Dollar right now, she has done 57,000 contracts. And what you actually got, King Dollar is going to do a little bounce, because what you have here is this. She did 57,000 contracts, which are actually, even though King Dollar was up, it's a lower low today. We went to a lower low, so that is basically a rejection of lower price on lighter volume. So what you have inside King Dollar is that now King Dollar will try to get into 97.69, which is only a few more ticks, actually. She could probably do, yeah, 97.98. I don't see no big bounce out here. That's the real bottom line. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. We have the Dow Industrials right now down 33, NASDAQ off 12, S&P's off 5.5. And you can expect lower prices into the close, folks. This is the type of deviant market. It goes down, comes back, almost positive, goes south again. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now off 27, Nasdaq off 11, S&Ps are off 4.5. And as we do each and every Thursday, folks, at 20 past the first hour, we get our man, Mr. Andy Heck. Don't forget, Andy has an outstanding show right here at TFNN, 5 to 6 every Tuesday, Thursday. He also got a great newsletter, the Technomento Commodity Report. You can test drive that right at TFNN. Go to newsletters, go to trading newsletters. You can test drive it 30 days absolutely free. And don't forget, all the programming at TFNN right on your cell phone. TFNN.mobi. Andy Heck, what's going on?
How you doing, Tom?
I'm doing great. I was thinking of Andy Hall this morning driving to work.
Oh, yeah, well, we'll oil up. Hey, you know, I want to tell you, a lot of times, listen, you're a totally technical guy.
Yeah.
No question. And I'm pretty much a fundamental guy.
Yeah.
But I think given what happened last night, and what's going to happen for coming months, we have to factor politics big time into what these markets are going to do.
There's no doubt.
This deal in Yemen, this Shiite-Sunni war now, is perhaps the most important event that's happened in in many years, and it's going to really affect markets. I mean, the oversupply in oil is clear. However, you know, the location of Yemen and the southern ports near the Persian Gulf,
right?
The fact that this really pits the Saudis against the Iranians. Forget Yemen.
No, listen, I agree. You know, I don't know if you heard me, Andy. I was working last night when this was happening, and so I was in front of a screen.
Yeah.
And I saw this come across, and, you know, I'm looking at the E-minis at the same time, and I'm saying to myself, I can't believe the E-minis aren't moving, man.
Yeah,
and
I know,
I've seen that happen before. I'm sure you.
Right.
And I says, you know what, man? You know, my takers are going down anyway. But this is huge, man. I mean,
no, this is huge. This is huge. And you know, it's scary, Tom, because, you know,
it is. It is.
It's the world lines up here. This is, you know, I'm not saying that this is World War III, but hey, it's got potential.
Listen, my take on this deal, okay, kind of goes like this. Guess what? The Saudis, the kings and queens, they get all the madrasa schools. They've sent freaking terrorism everywhere, okay? They've paid it off, right? Now, guess what? It's coming home to roast. And they're sitting there saying, man, they're going to take us over. And it's...
Yes, and we're negotiating with a country whose leader stands up and says death to America before he says, like you say, good morning or good afternoon. Yeah. So this is a very dangerous situation. So the oil price now has become, look, oil is the most political commodity. We've come through a period since June where oil has gone from $108 a barrel down to $42 a barrel. Now we're at $50 a barrel. We are going to see increasing volatility in oil. I still think the pivot point now is $50. I've been saying that for a while, that we're in kind of a trading range. I heard what you said in the first segment. I think you agree with that, you know, we're headed towards the top end of that trading range, which is probably about $56 or so. But you got to keep your eyes on Brent crude, which is just under 60 here, because that is the one that's going to react if there's any problems in the Persian Gulf. And I'm also very curious about what's going on with the talks between our Secretary of State and the Iranians, because these events have to affect those talks to some extent. And that should affect the oil price.
Yeah. Oh, listen, man. I mean,
the very worrying. I got to tell you, very worrying. Very worrying for the status quo of the world.
We know the thing that's amazing, and this is amazing in general anyway, folks. The world has been in tough shape over there for a long period of time. What I saw, even when I'm looking at that map, is a difference. I'm saying to myself, and in the context of what I just said prior, you know, that Saudi is cute themselves. You know what I'm saying? And I'm saying to myself, you know what, man? They're going to try to lop off a quarter of Saudi. I mean, there's a way in there. Do you know what I mean? And it's right on their border. So it's like, okay, man, you know, and
the question is, what is the U.S. going to do, and where is Russia going to come on this, and where is, you know, people's sides line up here. It's a very interesting point in the history of the world right now, and it's a very worrying. There's a lot of potential tinderboxes. So that's going to affect all of our markets big time, our currencies, our bonds, our interest rates, and listen, most of all, raw material prices, because not only do you have to produce them, but you have to bring them to market. And when the world gets more dangerous, it becomes more difficult to bring them to market. And that's the problem with crude oil here, because you know how much 80% of the world's crude oil flows through that Strait of Hormuz, down through that Gulf, all of the stuff that goes west. We still import oil here. The shocks. We've come through a period that's very bearish in oil, but the market is so loaded up. Let's put a crude oil chart up and take a look at open interest in crude oil. And we see that it's about 1.75 million contracts, which is very high. This trade is loaded up on the bear side. There's no question. Right. So the shocks are not going to come on the downside. Listen, there's a lot of oil around, and this thing could dribble down. There's no question, given everything in status quo. However, when markets get loaded up on one side of the boat, you know that boat tilts.
No, it does. It does. Right. I guess and that would be the bullish side. The bearish side would be dislocation of trading.
Right.
Meaning
supplies.
I mean, I'm not even talking about oil now. I'm talking about movement of goods. Right. That you need oil to move, that, you know, dislocations like problems, you know what I mean, that slow down economies. You know, you get a slower economies, you don't need as much oil, you know, but.
That's exactly right. So you have a slower economy, but you have geopolitical, you know, potential explosion in the area that produces it all.
Listen, I agree, man. I think that they stepped on the price of gold today because the last thing they want is all of us panicking. You know what I mean?
It's a pharmacological prescription for volatility, and that's what we're going to see.
What did you say? What was that word?
Oh, like in a pharmacy, there's a prescription. You put everything together. You put it all together, and it means volatility.
That was a good word, man. I like that word.
Pharmacological. Yeah. No, it's going to be interesting. Hey, interesting coffee market. Let's take a quick look at that.
Okay.
And depart from politics for a moment, geopolitics, which always go into these markets. Let's take a look at coffee, and let's take a look at open interest in coffee. 200,000 contracts, the highest in history. Very interesting here.
Really interesting.
I think there's been a lot of hedging done. I think Starbucks, I wonder what percentage Starbucks is of coffee open interest. I wonder if I could find that out. I got to try to figure out how to kind of isolate. It's very hard to isolate it on one party, but they're a big hedger. Yeah. And I know that they were buying a scale down. But open interest is very, very big in coffee. So, you know, I always like to look for when open interest moves big, like I mentioned before in crude oil. I think it's loaded up on the short side. It tells you which way the boat is tilting. And usually when it tilts too far one way, it goes the other way.
Yeah, no, there's no doubt, man. There's no doubt. I got to show you something. Folks, you're going to love this. This is, you know, if we switch to copper for a second, right? Mm-hmm. I'm going to put a copper chart up first for you. And I want to show you something here because this is really intriguing. And I don't think you see this a lot, but realistically, the way this come out, you just stay right there, folks, because you're going to love this, Andy. This is a mind blow. Yeah. I happen to own one of these little stocks, but I want to show you one of their filings came out last night, and I'm going to show you just how smart the real producers are, which you talk about a lot. Do you know what I'm saying?
Okay, cool.
Andy, heck, Tom O'Brien, you stay right there, folks. We're coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow is flat, Nasdaq's up 4, S&Ps are down $1.50. We're talking about our man, Mr. Andy Hecht. And don't forget, folks, right here at TFNN, all the programming, 8 o'clock in the morning to 6 in the afternoon. Live programming. You can get it right on your cell phone, TFNN.com. Andy has an outstanding show. As soon as I'm off the air at 5, he's on from 5 to 6. Now, Andy, we're looking at a copper chart. Copper, okay? And you can see, you know, the lows in copper, folks, okay, thus far have been 242. The first one was January 14th, and the second one was 242 on a test of January 29th. Mm-hmm. Now, inside the gold report, folks, we have a couple small copper stocks. One of them that we happen, and I'm not saying to go buy this, but one of them we happen to own is TGB. Now, TGB, folks, okay, is a stock that is trading like 69 cents, 70 cents. They take in like 360 million bucks. Bottom line is that I don't expect this stock to go to the moon, but, you know, it can go up a bit. Where the TGB's main problem, by the way, the reason people have bought it over the years is that they have this mine up in Alaska that they've been trying to open for 20 years. I don't think they're ever going to get it open, by the way, because...
By the way, Tom,
yeah.
TGB, I like that stock. You know, I bought that stock last year in my report.
Okay.
And we actually made a little bit of money. We stopped out of it, you know, on a down move. But what I liked about it was that when FCX was having all that problem in Indonesia,
right.
I wanted a domestic type producer.
Nice.
So I am familiar with the stock.
And so it's wild, because if they ever got well, anyway, the larger mine that I don't think they'll ever get open has to do with the amount of water that they're going to push out into the streams and all this stuff. But that being said, it was set up technically, right? So what ends up happening Monday night? Yeah, Monday night. What day is today? No, last night. I was still in the office last night. So last night they come out with their numbers, folks. Okay. Now, inside the numbers, now you don't know this when it's happening, but inside the numbers, Andy, so check this out. This is amazing. They closed all their hedges out. So inside their, they come out with their yearly numbers last night. Inside of that was the disclosure that they closed all their hedges out at the lows in January, and they made an additional $17 million. And
they bought the dip.
Isn't that, it's amazing.
That's great.
Well, you know, it's so cool, right? When I read this, folks, I says, okay, so they were hedged. They came down. They closed it out. Means they sold it to someone else. Someone else thought evidently copper was going to go lower. They're the producer. And, of course, the producer knows more. So, actually, inside that disclosure, what it was also saying that we're clean right now, and we will put our hedges back on, but we're going to put them back on at a higher copper price. Isn't that a trip?
And now they have a higher copper price.
It's amazing. I know.
It's great. It's great. But, you know, listen, I have a long-term chart of copper up here.
Yeah.
You take a quick look with me.
Okay.
And what you'll see, since we made highs in February 2011, this is a monthly chart, we have made a series of lower lows and lower highs. And we had this, you know, this crater down to 240. We've come back. But so long as we stay below the 325 area on a long-term basis, Tom, this is still very much a bear market in copper.
I'm bringing the
monthly chart.
I'm bringing the chart up. I'm bringing that baby up. Let me get it in front of me. Let me see here. Where am I? Copper. I think I just brought up the wrong contract, but there we go. Okay. No, we're on the HG. Yeah. Okay.
HG, high grade.
Yeah, right. Okay, so yeah.
It's not a no-brainer here. I mean, listen, momentum shifted. To think we've had a nice bounce here. God, it's funny. Copper really has been a beautiful, of all the commodities we look at,
yeah,
it's been the best proxy for the dollar. It moved with the dollar.
242.
Really had a nice correlation with the dollar.
30 cents. Yeah, so we just finished one ABC up. Well, we'll see what we get. Yeah, I mean...
What bothers me about copper here is that I have not seen similar moves in aluminum, nickel, lead, zinc, tin, the other base metals. These are all, you know, it's all infrastructure building stuff. It's all about China. Hey, let's talk about this. Listen to this. You see that two things interesting happening. First, the NASDAQ is going to start introducing futures. That's very interesting.
Oh, really?
Compete with the CME and the ICE. But more important than that, the Shanghai Futures Exchange is opening, will now have contracts in copper, aluminum, nickel, lead, zinc, tin, gold, oil, and given what I've been writing about for months and months and talking about on the show, how, you know, increased regulation, Dodd-Frank, all of this stuff has pushed physical commodities trading to places like Geneva and Hong Kong and Singapore, less regulated zones. Now we're going to see futures exchanges open up, and this Shanghai Futures Exchange will be important. So you're going to see the monopolies of the CME and the ICE kind of broken down. Right now, there's still good reasons for that because of cross-margining. And listen, $2 quadrillion worth of contracts traded on the CME last year. That is enormous amount of volume that trades there. And it's not going to change overnight. But over, you know, years, we're going to see these markets move away from U.S. shores. There's no question about that.
Wow. That is huge. Well, and particularly, folks, what you have there is that large traders will move there quick because at the beginning, there's always more opportunity. You know?
Arbitrage.
Yeah,
They'll
right.
be able to trade the CME against the Shanghai, the LME against the Shanghai, and that's going to be, you know, when Chinese figures come out, that's going to react very quickly. You're going to watch the stocks there. It's going to make the markets more interesting and more global.
Oh,
certainly.
It's dynamite, man.
But it's great. But it is going to move these markets further away from the clutches of U.S. regulators and U.S. tax collectors, which is not good for the United States. You know, we walk a very fine line, particularly when it comes to raw materials. When it comes to paper, when it comes to stock markets and bond markets and even foreign exchange markets, it's one thing. But when it comes to raw material markets, these are truly global markets. We have to be very cautious because we operate with the rest of the world. The U.S. has only less than 5% of the global population. So my problem with a lot of the regulation, a lot of the things that have gone down, not that they're wrong, the problem is that often the politicians, the regulators, they don't examine the long-term unintended consequences of these types of policies and how they will come back and hurt us in the future.
Yeah, I think the aspect of commodities in general, they don't care about. They should. Okay.
Well, they don't care about it until they care about it.
No,
you know
I'm with it. No, they should.
Right.
No, my point with that is that,
right.
Yeah, they're slamming, you know, they're really just not paying attention to it.
Right. They slam the banks because, they manipulate, they whatever. But, you know, okay, but they have some degree of control. If you think the bank's manipulated, let me tell you what Glencore is going to do when they get a hold of the iron ore price or the copper price.
Right.
Well, let me tell you what the Chinese, you know, are going to do, or Gunvor or Mercurio or any of these big, or Louis Dreyfus or any of these big commodity companies. Listen, they're in business to make money. If they can manipulate price and make more, they will. Just like the example you gave with the copper producer who went back and bought back their hedge. Right. Not that they're manipulating. They do it to make more money. They're in business to make money. So
and they understand there's nothing like trading an instrument, folks, when you are the producer. It's as good as you can get, right? I mean, that's the reality.
Hey, it's even better when you're the producer and the consumer, like Glencore, where you see it all. You see every flow coming in.
Yeah.
So therefore, you're even that's one step above the producer. You know what I mean?
No doubt.
I mean,
man.
you know, that's where you see the whole order book. There's nothing better, and there's no easier way to squeeze the markets around. That's what we have coming down the road.
So you know what we're gonna have to talk about maybe next Tuesday.
Tuesday I'm teaching in Denver. I'm not on Tuesday, but I'm on Thursday.
Cancel it.
I can't.
I'm my kid.
I'm committed.
So next Thursday, I think we're gonna have to go over, and hopefully, you know, Andy's gone over a few different times, folks. Okay, the oil type of trade, near month versus pushed out month, and I'll have him tell that story again because that is the type of.
That's what we're looking at now. You mean the Andy Hall story about
because
the backwardation?
Because that would be the trade to put on now.
Well, absolutely. Hey, and it's free. It's the front to back. It's just buying the front and selling the back.
Right.
And it pays you while you wait. It's
right.
a beautiful thing. And by the way, it's come in. Last week, it was 25%. Today, let me just take a quick look at where it is.
Okay.
It's come down to, because of what happened last night.
Right.
It has come down to about 15-odd%. It's a big move.
That's huge.
15.6% today.
That's huge.
It's a big move.
That's 25, 15 leveraged. Forget it, man. That's huge already.
If you're big enough to put that trade on, and you need a lot of cash and a lot of storage facilities, and you got to be Andy Hall or a big oil company or a big trader.
Yeah.
If you put that on, you got a free call on backwardation. If all of a sudden all hell breaks loose in the Middle East and the price of oil doubles overnight, it ain't going to be 2-year, 3-year oil. It's going to be spot oil that doubles.
Right.
And you are going to make, I saw him make $400 million in 10 minutes.
Oh, my God.
And he didn't even have that big a position. Okay? He said, that was what he was saying. That's what he said that day. Oh, if I only had my normal size on.
Oh, my God. Listen, man, thank you so much. Have a great one. Look forward to speaking at the show at 5 o'clock.
Thanks a lot, Tom. Have a good one.
Stay right there, folks. Come right back. Dow's down 5.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Apple's up $1. You have SanDisk. That's getting whacked. That's a third gap down. That's down $15 at 66. You get GE down 4 cents. Some of the Dow stocks out here we have happening inside the Dow Industrials. Right now, you get the American Express down $1.50. Honeywell's up 32. IBM is up 163. Let's go over to IBM. So Big Blue, folks, just hasn't been able to handle the 165 level. Comes off that 165 and comes off it fairly quickly each and every time that it's up there. So what I expect you have there is that you have a very large fund that has an order sitting out there because each and every time it runs up to that level since going all the way back to October, it just can't handle it. Now, what are we doing out here today? Well, guess what? You're just bouncing on light volume. We came off that high that last high that was 65.35. Actually, the day next, 65.35. Last 2 days, you come down. You had a slight expansion with volume. Now you're going up with lighter volume. That baby's making building cause to get down to this 155 area once again, and we'll see. It's the 155 to 149 area that is the bottom of the consolidation. And then what you also have at that area is that. Are you going to blow out that area? And is this a very large ABC structure on the way down? Because that has been building cause, and it's been building cause for a long time. We're going all the way back to October. So that is one large number, no doubt. Now, XLE. We're talking about energy, but you know what? The XLE still can't handle price. That's what's going on here. And what that's going to be, what you're going to see with that is that has to do with ExxonMobil. The XLE got to a price point today of $78.25. Now you're at $77.04. What that was doing is it was getting over the swing of $77.95. That is where we had 27 million shares traded. Today we've done 14 million. You're underneath it again. It's pretty amazing that it can't hold price with the aspect that, as Andy and I were just talking, that you can get some real price movement in oil. What the difference is for I would say the oil and gas large integrated companies, however, is this. It has to do with is this going to have markets slow down? That's the real bottom line. Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
Good, man. How you been?
Well, not bad. Hope you're well.
Yeah, I am. Thanks for calling. Appreciate it.
Okay, well, I just got a quick little thing here.
Yeah.
And you'll see. It's called Patience and Perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling hokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. That is so funny. Well, listen, man, I really appreciate that.
Well, you're more than welcome.
Yeah. Hey, you and Bud Rolfs must be cousins.
Why is that?
Do you remember Bud? Bud
yeah. He's the one that started teaching me trend lines.
Yeah, and he's got those great poems. He's a good writer, man.
Yeah, he isn't bad.
Yeah, I like it. Well, you are too much, man. Well, listen, man, I really appreciate, the poem big time, man.
Okay, thank you.
Hey, and we got to send you up some warm weather, don't we?
Well, it's breaking. Spring is really coming. The snow's disappearing out of a lot of yards. It's kind of cool rain. It's, it's...
That's nice.
Yeah, spring is right around the corner.
That's a beautiful thing, man.
All right.
Okay, Marty, you have a great one. Have a safe one, man.
You too.
Thanks so much. You got to love it. Thank you so much. And listen, folks, I want to thank all you Tigers and Tigresses out there, because without any listeners, folks, we'd have zero business. That's the bottom line. We absolutely enjoy what we're doing, and I hope you enjoy the programming out here. because we have a lot of all our hosts, all of my staff. Bottom line, over the course of the years, it's been a great thing. You know what's amazing? What blows my mind, sometimes I think about it. I was actually, this is funny. I was looking at some of the paintings that I have in the office, and one of my best friends is an artist in South Boston, and we're still best friends. And I was looking at some of the paintings, and some of the paintings in my office in 1976. I says, oh my God, 1976. Then I start thinking about being on the air, and I'm saying to myself, oh my God, I think it's like 20 years now. And that really blows my mind, because it's like, I remember the day that I was taking a computer, and Barry Armstrong, he had a station. I think he bought the station after that, I think. Yeah, he bought the station a year later. But there was a financial station in Boston. I remember taking my computer, throwing it over my shoulder, and said, okay, let's go do a radio program. And when I started out, I'd do it 1 hour for 3 days a week. I think Monday, Wednesday, and Friday. That lasted for about 2 months, and then I went 5 days. And the rest, as they say, is history. Pretty wild. So markets out here, folks, deviant. Deviant in spades. These types of markets, what you'll get these small bounces intraday, coming down hard. Now, where I'm coming from is where I started this program out today, and it has to do, when you get a situation like this, I'm not a conspiracy guy on the basis that governments are stepping on markets all the time. Last night, though, the way that the S&Ps were trading, it was like, people are always in front of their screen with E-minis, folks. And either everyone was sleeping at 8:30, or basically markets were just, you had that shot, because there was plenty of time to go short the market. Then today, though, I suspect that they were stepping on the gold market. And the reason being, they're not going to be able to control it. It's going higher. And the reason being is that they don't want that fear going through the marketplace in general. It's amazing that the fear hasn't gone through the marketplace, never mind what has happened with Yemen, before this. That in itself, though, is a big heads up, because the Saudis won't get involved in anything. They don't want to get their hands dirty if they don't have to, folks, okay? Not even close, okay? For them to turn around and, basically, well, they have to defend themselves, because the bottom line is that that space is wide open to come into. And I think they're going to, I don't think that's going to happen, but I think it's going to be a big problem. And that problem is going to be with us. It has been with us for a while, but right now, cutting to the chase, there's going to be more volatility in the marketplace. There's going to be more movement in the marketplace. And, a lot of it's going to have to do with oil. There's no doubt about that. Mr. Tom O'Brien, this is TFNN. You stay right there, folks. You're going to be coming right back. And then, of course, our man, Mr. Andy Heck, is going to be growling and prowling with you from 5 to 6 tonight. Dow right now is down 38. NASDAQ's off 11. S&Ps are off 5.5. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. This is a quote by an unknown author. Dare to believe. It's a beautiful thing. Market-wise, let's take a look at it out here. We had the Dow Industrials close down 40, NASDAQ off 13, S&P's off 7.5, gold contract up $6.10, traded 1,203 an ounce. Silver up 6 cents at $17.06. Platinum up $8 at $1,153 an ounce. Copper up a penny and a half at $2.82 a pound. Light sweet crude up $2.15, trading at $51.31 a barrel. Bonds, we had the 10-year down 17 ticks, 128.06. 30-year off 2 full points at 162.20. And King Dollar up 393 ticks, trading out at 97.53. The euro is off, where is she? She's off 88 at 108. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so S&Ps, folks, coming into the lowest swing point with volume. Market tried to hold as well as it could hold out here today. Futures were down heavy this morning, about 14 points. They came back quite a bit, but bottom line, they actually didn't. It was a sideways move to down, but what we had is this. The swing low of March 11th is 204.40. We hit 204.12. We did that with 145 million shares versus 110 million. So what does that mean? That means that, guess what? You're not done on the way down. It means that this market wants to go after the bottom of the consolidation that had been in, that it actually had broken out of. That bottom of the consolidation now is 197.86. And what it also means is this, is that when you actually look at this market, the market hasn't gone anywhere since November 6th, which is pretty wild because we're dealing with the end of March right now. But we've been up at these highs. Each and every time that you do go down, you're building cause to go to lower price. You get down with volume, you go back up with lighter volume. It cracks again, you go back down with volume. Bottom line, if you take a trend line on the S&Ps, and I'll do that in the program. If you take a trend line with the S&Ps, bottom line, when we broke down in October of 2014, that was the initial break. All these higher highs have been just that. They've been tested and they've failed. The NDX 100, the 3 Qs. What do you have with the 3 Qs? 3 Qs today got into and under its swing point, and you had juice behind the move. We did 46 million shares. We closed at 105.12. That swing point is 104.96. The last swing out there, we did 21 million shares. Well, we did double that. We did 46 million. What does that set up? Sets up the same type of situation, meaning that you're going to run down into the lower part of this consolidation. The lower part of this consolidation is down at the December price points of 99 bucks, and you're at 105 right now. The larger issue is October 15th. You know, when you're dealing with October 15th, and many of these equities are already blown by those, the October 15th swing low is 90. You know, and we're still at 105, which is a big number, by the way, from where we are versus where I suspect we're going to get to. Gold contract. What do we have with gold out here? We had juice in gold. It didn't hold price. We stayed up. Okay, we were up at 620. Didn't hold price, though. And what I mean specifically is this. The gold contract got into a price point up here today of 1219.50. Closed out at 1203. But you know what we have? We have monster volume, folks. And when you get monster volume, pushing into swing points, you're going to be right back into that higher swing point, and you'll blow it away. We did 227,000 contracts today as it moves up to the 1219. Now, what that did also is this. We were talking about how we came off the bottom with conviction. What has happened in the gold market is this. We tested the lows as we should have. We were doing the larger test from 2011 all the way down to where we were a couple weeks ago, and we had done that whole area with dramatically lighter volume. That was going into the 2011 break topside. So on the way down, we did everything we should have done. What we hadn't had is any buyers. Well, the buyers came in fast and furious on March 18th, when the Fed announced that they're going to take out the patients. Bottom line, market could care less. They didn't believe them. They're saying, hey, guess what? You can take out the patients, but the rates aren't going up. So we got the expansion of volume, wide price spread on the 18th. You got the follow through today. That's what's happening. That's gold. Because gold hadn't, it wanted to go test the 1223, but it hadn't broke the whole downtrend from the 1308. So you're at 1203, gold wants to go to the 1308. Silver, we take a look at the silver market, and silver has been ahead of gold off this bottom, folks. So we take a look at silver. What we have with silver is this. Silver market today, this is, okay, silver. What silver is done out here today, silver is closed out at 1705. What we did out here is that we did 41,000 contracts, and silver had already got into and over the 1690 area. It was testing out the 1743 today. You got the 1740. I expect what you're going to see here, and you had some volume in it. It would have been nice to have higher volume. We had 41,000 contracts. That's not bad, but when we did on the 20th, we had 60,000. So it would have been nice to have more. I expect what you're going to see, silver's going to build some cause here. Silver is on its way up to that 1850 area. So you're talking about a nice move on that contract. Now, let's go to the XAU and the HUI, because what we had out here is that they sold off the XAU, they sold off the HUI, they sold off the gold stocks, they sold off the silver stocks, and they had a little volume on them. So it's like, okay, what's that all about? Well, the XAU right now is at 68.39. I expect what you're going to see, the 67, 66 is going to get tested, and what is always dangerous, no doubt, is coming into a Friday with the aspect of the gold market pulling back slightly. Now, I don't think that's going to happen tomorrow, specifically because politically over in the Middle East, there's huge problems. So I expect just the opposite will happen inside the contract. Why? Because traders, investors, hedgers, all of the above are going to be really paranoid to go home short gold. Okay? Bottom line, you get more disturbances over there, which I expect you're going to get. You're going to see gold. You know, we gapped up 20 bucks last night when this thing happened. Gold can gap $50, $60, $70 in a heartbeat. And once those gaps start taking place, let me tell you something. You can get some really fast gaps inside the gold market. Bonds. Let's go to the bond market, because bonds got hit out here today. Now, they got hit, but the way they got hit, folks, is still saying that the 32-year bull market in bonds is not over. 32 years. That's how long it's been going on. Pretty amazing. Bonds right now, we're down 16 ticks. We did 1.2 million contracts. That 1.2 million contracts was going against 1.4. So that setup there is that bonds are still building cause for a higher price. King Dollar, we can put it together with King Dollar. What we have with King Dollar is this. What King Dollar did do out here today is that it rejected lower price and had lighter volume. I don't expect you're going to see a lot of movement, however, tomorrow morning on King Dollar. I expect that it's going to go up maybe, we're up to 400. It can go up a couple hundred ticks. Give it up. It wants to go into the March 19th area. And the top of that area is not too much further from where we are. It's about 200 ticks. I expect it's going to get a little sell-off coming into that area. And why? Because that absolutely has to do with the aspect of how the metals market is trading, wants to trade versus the dollar. I think what you had out there is more than likely the Fed, someone was stepping on gold. They don't want folks to get really paranoid about what's going on, particularly in the Middle East. And the quickest way that folks pay attention is that when gold gaps up $50, $60. You know, you haven't seen it in a while. Gold gaps up those kind of numbers, people stop paying attention that what is happening. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials down 40, closed down 40. Nasdaq off 13. S&P's off 5.5. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Another one bites the dust. Another one bites the dust.
And this one biting this dust is good old SanDisk. If you want to see a chart, SanDisk has it all. Pretty amazing how this thing is shaken out. So SanDisk today, folks, gapped down $15. When you take a look at this chart, what you're going to see is this. Going all the way back, and this, by the way, is a classic technical 3-gap down play. You know, many times you have we have folks that are calling in. You have a gap down. You always got to be worried about a three-gap situation on the way down. This one's a classic. And by the way, you never know when they happen. It's not that you know they happen. What you want to be aware of is that when you even get one gap, you can get a second, and for some reason, the probability goes much higher after you get the second that you're going to get the third. I'm going to walk you through these, okay? Because the first one was just about, well, it was July of last year. July of last year, you had SanDisk was trading out at $100. Gaps down to 93. Goes sideways with light volume. If you want to see how this works, okay? So watch this. If you're a long-term investor, just knowing the volume characteristic of the equity, I mean nothing else, folks, nothing else, okay, will help you tremendously. Why would it help you? It'll help you stop buying a stock that has a high volume down and the stock is crawling higher. Because I can show you time after time after time after time after time after time. I can just keep going. They come back there. So if you're going to buy the stock, just that one aspect of volume, that's all you have to know. And then the way you buy it, you wait for it to basically test, then buy it, then take the shot on it. That one aspect alone will save you some grief, save you some money. SanDisk, what does it do? Comes down to $93. Runs down to 91 after that. Then what does it do? Guess what? It goes all the way back up to 104. So picture this. It had come down on 26 million shares. It gets to 104 with 4 million shares. It's like, oh, really? So no one's in the store. They've been bailing out 29 million. So 29 million, you're down at 91, all of a sudden goes all the way back to 104. Okay, so what happens then? Guess what? It comes back down. It goes from 104, now it goes to 80. At 80, do we have a high volume spike? Yeah, we have a high volume spike. What does it do then? Comes all the way back up and gets to 106. Like, really? Wrong. Can't handle it. It's closing the gap from the first gap down. Pulls back slightly, and then what does it do on the 8th of January? Gaps away again. That gap away, and it closed on the 9th of January at $97, opens the following day at 82. Gets lower, gets down to 78, and then crawls all the way back to 88 again. What does it do this morning? It gaps down 20 points. And now I'm going to bring this and just put this for you on a monthly so you can see the much larger setup. And the larger setup, folks, is not only problematic, but what you can see with it is this, is that everything that was generated over the 2006 high, and the 2006 high, let me bring this back, that's a monthly. Okay, so the 2006 high was $79. Everything over that, the break top side, was on dramatically lighter volume. And what this would do, having you understand how this works, is number one, yeah, you know, there's plenty of people that might have bought it at 60 and they may have sold it at 108, but more than likely, even then when they bought it at 60, guess what? It's back to 60 and they haven't sold it and they're going to keep it now and say, oh my God, I could have made so much money. That was all distribution at the highs. Now what you have is that you're back inside the lower range. You're coming back inside the lower range with real juice. And we'll see whether 62 can hold. I suspect it's not going to hold. The reason being is that the way this is set up right now is that the uptrend that started in June of 2012, it started at $30. That's where it wants to go. When you break a trend, as we have in the S&P, as this has broken it, you go back to the bottom of that trend. That's how trends are great on the way up, and they're disgusting on the way down unless you're on the other side of that trend, meaning you're basically shorting the market on the way down and you're looking for those types of numbers on the way down. And of course, the elevator on the way down is a non-stop elevator. The elevator on the way up has about 8,000 stops in it. It's really important to understand, though, because this aspect of how SanDisk was trading, number one, is glaring. The October 15th swing low was out there, got destroyed, and what we do have with some of these stocks now is that the October 15th swing low, they've come into them, they've stayed underneath them, and that's problematic. I'll show you one that hasn't, okay, stayed underneath it, and it's Google. It's going to be interesting to see how Google ends up trading out here, and this is why. Let's pull this up, because I've been keeping track of the ones that are at the October 15th swing low, have closed under it, stayed under it, and what they've done since then. So if we take a look at Google, what you're going to see is this, is that, well, is that we're trading right now at 555. The October 15th swing low out there was 508. We hit 508. That little baby had hit 508 and went all the way up to 522. We broke the October 15th swing low and went to 489 in December. That's when this baby went to 489. It took the October 15th low out. It does a counter trend bounce, gets up to 542, pulls back down again. Now, as it pulls back down again, what ended up happening? Well, guess what? We had some juice on the way down. Google, the way Google's trading right now, we get back inside 540, which I expect it will. You'll get a breakdown, and you go right down to the bottom again of 489. So that's a stock that came down, tested it, got higher, and it could stay higher. The real key is going to be at 541, what kind of juice it comes down on top of it. Now, let's go over to ExxonMobil, different ballgame. ExxonMobil went after the October 15th swing low, busted the October 15th swing low with volume, busted out of its range, and it's hugely problematic because what you can do with ExxonMobil is this. You take the, I'll put it on a weekly so it's a little bit clearer. You take the highs to the lows for ExxonMobil. You take the bust of the consolidation. When you get that, ExxonMobil, folks, can go dramatically lower. You know, right now, ExxonMobil's trading out where it was trading in 2011. And you know what we have? You have a high volume spike at $67 and you're at 84. This is Tom O'Brien, this is TFNN. You stay right there, folks. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. trends. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. American Express was down 163. You had Exxon off 54. DuPont was down 27. United Technologies was off 42. Walmart was up 57. You had GE down 11, and Johnson & Johnson was down 20. Let's go over and we'll start with American Express. We take a look at American Express. The American Express had all their meetings out here yesterday, the day before. Bottom line is not doing anything for its stock. American Express has gone from a price point up there at the $95 level. Right now you're at $78.48. You're going after, well, actually, this is a classic, okay? So this is another one that had the high volume October 15th swing low. In fact, almost all the equities, folks, have a high volume swing low of October 15th. That's where these things want to go. We had the high volume spike of 78. American Express goes all the way up to 94. What does it do? In this particular case, it comes into the October 15th swing low, and this is when it's vicious when it does this. It came into it and gapped right into it and blew it out. So now what you have is that you have a higher volume low at 77, where the it was 78.40 before. So now you have a higher volume swing low. What's happening now? What you have now is that American Express is building cars to blow away both of those areas. We're coming into this area now with expanded volume. Man, this is a trip. And, you know, technically, that's how it's set up. Fundamentally, one of the large problems, of course, is that when they lost the Costco account, it wasn't the aspect of just the Costco account. What you have out there is that it was about how many branded cards that they could move through towards Costco and the other relationships that other retailers have with American Express versus whether it's Visa or MasterCard. What I think has happened in the course of time anyway is that I remember going back in the 80s, folks, the Diners Club card was the big deal. You know, I remember I had a Diners Club, American Express, and this is what the difference was then. The Diners Club card, you could actually charge 10, 20 grand in a heartbeat once you got it, okay, just if you got it. The American Express card, you could go up to that point, meaning if you had it for a while, they keep going up. But the Diners Club card itself, that's how that was done. Now, I forget whether someone bought them out, what happened with Diners Club, okay, but they were gone. So once they were gone, from that point on, American Express, no doubt, is the premier card. Their black card still to this day is the premier card. But what has also happened, because of the amount of award programs that are out there and the amount of specialty cards that give you not as many benefits as the American Express, the Platinum, but you're paying for that. But they give you quite a few benefits. That facade has been breaking down. So fundamentally, that facade has been breaking down also. Technically, the way this thing is set up right now is that you're at 78. This is going to make the run more than likely. I mean, it looks to me like there's going to be some problems here. Whether it's 6 months, 8 months, this wants to make a run down to about $50. Because you've come off the high now, and you come off that high with volume. You know, the first month, 3 months ago, you went from 93 to 80. You know, you break down here. It's going to be easy to get into the price point of 61. Now, what you're also going to see is this, and we saw this with SanDisk. And if we start seeing this with a few more stocks, this is going to basically give you more probability that the S&P is going to continue under the 2007 highs, which it broke out of. The 2007 highs in American Express is 65. You come back underneath that at 65, that is problematic in spades. Why is it problematic? Because I don't have all the stocks handy right now, but I'll show you a few of them that have broken back underneath that area, and that's a problem because we're at 2,056 right now on the cash S&P. The 2007 high is 1,576. You know, so bottom line, the way that it looks to me, we're actually going to go lower than that. But as some of these other large equities that you wouldn't expect would go lower than that, start going lower than that, then you get a huge problem. And everything, when we went over this 2007-6 high, rather, it's all light volume. It's just set up exactly like Lam Research was set up, exactly like SanDisk was set up. Let me see. I don't think ExxonMobil ever made it over it. Let me just we'll pull up ExxonMobil for a second just to see, and Chevron. Because you have those large stocks. If they actually have done it, then I don't think they ever made it over it. That's what it was. Okay, so this is what happened here. They made it over it, but the extension is not as much. See, the 2007 high in ExxonMobil was 95. And yes, it made it over it. It stayed over it. It made it to 104. And it did stay over it for about 7 months. Now it's back underneath it. Let's go look at Chevron, CVX. And this is how you can take a market apart, folks, meaning that you start taking some of the large stocks. You say, okay, what are you doing? There's always someone leading or lagging. That's the bottom line. That's what you're trying to look for. So it will give you somewhat of a heads up about where we are in the market on a longer-term basis, particularly if you're just an investor, meaning that you buy and hold. We take a look at Chevron. So Chevron right now is traded at 105, and Chevron's teetering on getting back inside it again. 104.63. Guess what? Chevron would be back inside the range from 2006. And that's a huge heads up. It's a huge heads up. Let's go take a look at United Technologies next. I believe that's still over it, but we want to take a look at it. United Technologies right now is at 116. Oh, this is a good one to look at, too. So check this out. United Technologies at 116. The high is 82. What United Technologies has done, it's come off the high with volume, tested the high again with lighter volume. So when we come off the high, the first high was 120. You come off that high with monster volume. You get the spike low out here. Your spike low, which is going after, is 97. You go higher, you test it again. You know, how we come down is going to be crucial. But the way that United Technologies is also trading is saying, I suspect, little by little, it's going to make its way down into that 82. Doesn't have to bust the 82 because it could certainly hold the 83 area. Where that would be holding would have to do with how it traded down, actually, on 2011. But that should save it this time coming down. So United Technologies will release a lot of information as that baby moves into lower price. If we go take a look at 3M, and what we're looking for on all of these folks is that you're looking for, number one, I'd be looking for, do they have a high volume swing low October 15th? And where are they now into correlation of that? And how are they trading? You know, if we go take a look at this 3M, this is going to be a huge one. The reason being is that 3M took off topside in an incredible way after this high volume swing low. So picture this. 3M is at 162. The high volume swing low is 131. It's like, okay, can we really get down there? Yeah, we can. And that would be a hit and a half. You're talking about a $30 hit on a $130 stock. And it's out there screaming that, guess what? It wants to get hit. You put this on a weekly or a monthly, all the volume's down there. And if that's the way that this baby shakes out too, and remember these programs are archived, so you can go over this program, because this essence here, the more stocks that I keep bringing up like this, one by one, they'll start falling apart. The sectors start falling apart. They start falling apart. And then what you'd see, particularly with the stocks that we're going through right now, all of these highs that have been out here, long consolidation highs, have really light volume. And the way markets move, folks, this is how it happens. At lows, where you have accumulation, accumulation is on light volume at lows. Markup. Markup expands all the way up. Markup is on volume. And the longer, by the way, the longer that you can consolidate at lows on light volume, that's building a big base, the higher you can go. So picture it as Central Park. I used to do this with the gold a long time. Gold was in a 20-year bear market. Started getting in a bull market. Took about 7 or 8 years of consolidation. Consolidated like Central Park. You get a big consolidation. You can build a big area, big high-rise on the way up. So high-rise on the way up, big volume, you're spiking up. At highs, you have low volume. Distribution is on low volume at highs. Then what ends up happening? Then you turn into the markdown period. The markdown period is just vicious, folks. The markdown period, you have wide price spread, you have accelerated volume, and what ends up happening? It takes everything back, and the whole process starts all over again. Circle of life. Pretty intense. This is Tom O'Brien. This is TFNN. You stay right there, folks. And I got that circle of life. Thanks, Mike, out in Hawaii. It's a beautiful thing. Love you. Dow finished down 40. Nasdaq down 13. S&P's off 4.5. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. This is pretty amazing. So Google just hired a new CFO. Pretty amazing. You ain't gonna believe the payday on this thing. $70 million. $70 million for a CFO. Oh, baby. That is absolutely amazing. Our man John from Philly, he wanted to take a look at the GDX. Okay, so let's go over and take a look at the GDX here. Okay, so GDX, folks, is the Gold Miners Vectors Trust ETF. Inside this, you have Gold Corp is the largest weighting structure, Barrick, Newmont, Newcrest, Silver Wheaton, Agnico Eagle, Franco, Nevada. Now, the way this is trading out is this, and this happened, by the way, in all the gold stocks out here today, and silver stocks. Put this on a daily, and what you're going to see is that even with gold up, bottom line, they traded back. They started up, they gave it up on the way back, and you had some volume come out of them. This is the one part that I do not like that would happen out here inside the metals market. So you had volume come out of them. The GDX did 53 million shares. Now, the 53 million is going into the 18th, where we had 83 million. Okay, so that's a good scene there. What I expect you're going to see is this. We're at 1907. And if we, on a daily, that 1888 is going to be hard to break down. Now watch when we put this on the weekly, because it's pretty cool when you put this on the weekly. And markets basically, no doubt, are deviant anyway. The gold market in particular is always deviant. Now, what you have on the weekly is this. You have the high volume spike going all the way back to October. October, that's where, you know, all these equities got smoked. That went down to 1683. And you are at that level, and you did it with 346 million shares. We came down, and we tested that level, and we did that 3 weeks ago. The test was 284 million versus 346, which is nice. Now, watch what we're doing. This is pretty cool. So, thus far, we've only done 152 million shares. So, that's on a weekly. So what I expect you're going to see is that it's going to test the highs of that, even on the weekly, which is 1881. And, you know, we'll see, do we have an expansion of volume today, like today? And if we do have an expansion of volume, then guess what? You know, that 1708 is game. I don't see it happening tomorrow. The reason I don't see it happening tomorrow is that going into the weekend, let's go pull this up right now. Let's pull up the gold contract. Because the movement out here tonight, folks, will be in the metals contract. And one of the main reasons is this, is that the metal itself got stepped on once the markets opened. And that stepping on process was from our own future markets, no doubt. And stepped on means that, yes, we're just selling, selling, selling. What we're going to see out here is that the active contract will be active all night long. You'll see this contract start moving around at about 11 o'clock tonight. You know, Asia opens at 8, but it's normally about 11 o'clock that you see this thing start moving. I expect you're going to see that. We'll wake up in the morning. Gold will probably be up another $10, $12. And what that will be doing, that'll be testing the highs of today, because we did 225,000 contracts today. So now watch. Tomorrow, as you're a trader or an investor, the question is going to be, do I go home long or do I go home short? Now, what would end up happening is that I could picture that people can say, no, I don't want to go home long. You don't have to go home long gold. Why? Unless you're a gold bug, unless you think gold's going higher. You don't have to be a gold bug. You think gold's going higher. You could be hedging. My take would be, you don't have to go home long. But guess what? As an insurance policy, that's a decent insurance policy, even for people that don't buy gold that have substantial portfolios in the marketplace. So you might get new buyers there. Now, do you go home short gold? No. No one in their right mind, even that likes the short gold, will go home short gold. Why? Because you're going over 48 hours that gold's not traded. Gold will close tomorrow in the pit at 1:30, and it won't open back up until 5:30, 6:30 Sunday evening. It's the only time during the whole week that gold doesn't trade 24 hours a day. So whatever that position is, you're in it. They won't go home short gold. So where does that put us? Well, that puts us in a decent position coming into tomorrow, because Friday can be a vicious day inside the gold market, because when they can drive this thing lower, they do drive it lower, and they drive it lower with a vengeance. So it's going to be an exciting day tomorrow, no doubt about it. You get the GDP in the morning at 8:30. You know, volatility is going to be all over the place at night. Big problems, no doubt. Yeah, one of the traders want to look at TGB, and we happen to own TGB, folks, okay? That's Taseko Gold, and it's going to need more action. It's not off the bottom yet. Bottom line, you need wide price spread. You need accelerated volume. We had actually brought this up when I was interviewing Andy a little bit earlier. They just come out with their numbers, and one of the best things I saw in there, which is pretty cool, is that they closed all their hedging positions in the copper market, and they closed them right at the lows. But, you know, they just closed it, but that was a good deal. Most of the time, you don't see that actually take place, you know, but they pulled it off. They closed at the lows. So what you do want to see, Taseko is trading at 68 cents. It has to get over 72 cents. The 72-cent level is a crucial level for this to get back inside of. What this has been doing, and that was why we bought it, is that it was testing the 2008 lows with dramatically lighter volume. You know, you're talking about a test out here with 5.1 million shares versus 16 million. So it was testing it with 30% lighter volume. It rejected that level. But what I do want to see now, right now, too, meaning within the next week and a half, hey, the sooner the better, that gets over 72 cents, then you basically are off to the races inside that market. And the larger issue, of course, for Taseko, we didn't buy it for this issue, but their larger issue, if they ever did get a permit, or they could push the largest, it's a gold and copper mine, but there's a lot of gold in it. They've been trying to open this mine for 20 years, folks, and bottom line is that I think the odds of it are not great. But guess what? You know, Taseko has a high volume spike up there at $4 to $6. So the stock's not done. And the stock, even though it is 85 cents, it does take in like $360 million. They're still in a losing position, though, however, taking in that kind of money. You stay right there, folks. Our man, Mr. Andy Heck's going to be coming up next with you, growling and prowling with you. Don't forget, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.